Welcome to our daily Forex range bar chart market analysis. My name is Schimming. This review is for Thursday, April the 4th. Now, what has been an outstanding opportunity to short the yen pairs over the last 2 months has come to a screeching halt today, at least on the short term, as the Bank of Japan announced they're going to inject about 1.4 trillion into their economy over the next 2 years in what's considered a dose of shock therapy and a way to end 2 decades of deflation. Now, on the short term, it did provide an immediate payoff, with government bond yields at record lows, the yen hit a 3.5-year trough, and the equity markets surged to multi-year highs. This also did change the direction of the yen pairs. Again, possibly just on the short term, we won't know that for the next few days, but definitely broke up what has been and what did appear were some yen pairs that were getting to break down significantly, and all it really has done is create a massive support level in the 120 range on the euro yen. Now, looking at my currency strength chart, you can see, now I just have the 4 majors on here: the dollar, the yen, the euro, and the pound. You can see the yen here, even though the market was trading very sideways before the announcement, very lethargically, largely in fact probably because of non-farm payroll coming out on Friday. But you can see once the announcement was made that the yen moved to the downside significantly. We do see how the pound, the euro, and the dollar are moving to the upside, but the yen, that's really a story of the yen, moved down through the London markets into New York, accelerated down even more, and moved down clear through rollover. And if you look at this at the end of this reading, we have a yen at a level of minus 405, and you can go back to every video in this section and you will not find a reading of plus or minus 400 in any of the videos that I've recorded. Now, we've seen this before, but they truly are the exceptions. There's usually some type of spectacular event, and today there is one. We also have the North Koreans posturing in a hostile way, which, dare I say, that I think the dog has more bark than bite, but it still is a dangerous situation, one that's not really a threat to the United States, but it would be a threat to United States concerns and allies such as Japan and South Korea. So I don't think that has helped the yen in any way, and had it not been for the Bank of Japan announcement, I think this action by North Korea still would have put some downward pressure on the yen. Let's look at what it did to the pairs today, though, because we were set up in a nice situation. I did have an open position in euro yen, and the reason you use a stop is situations just like this. I got stopped out with a very nice gain, not where I thought it would be. I was really anticipating it being able to break below that 119 range. It just did not happen because of this news announcement today. If we go over here to the bottom right, and let's look at the pound yen first. The pound yen had a low trade on Thursday of 140.38, and the high right here at rollover was at 146.82. That's 644 points on a single day. It really did march to the upside in a big way on Thursday. Euro yen 119.15 was the low, 124.66 was the high. That is 551 points, and both of them moved up another 100 plus after rollover to hit their peaks so far on this Friday. However, the change, even though it erases a lot of what's happened, it really hasn't done enough work significantly in price to really change the overall setup of these pairs. Let me show you 2 ways to look at this. That's the pound yen. Let's look at the euro yen, and let's take euro yen and look at 2 different views. One is the short-term view that we've been looking at, because this is what, as traders, what we're focused on. What happened in the last couple of days. You can see this low range down here, that 119.15 low was met right here, and you can see the high at 124.66 range, and then it moved up another 110 points after rollover. If we scoot this back and look at the week, you can see how the pivots. Keep your eye on the pivot. The pivot points are the hashed lines on the chart. But if you look at this, and if we go back several days, you can see how the pivots have been staring down. We've got last week, we get a little bit lower pivot. We get into Thursday and Friday, a little bit lower pivots. We get into this week, the pivot just keeps staring down and just stepping down day after day after day as the price moves lower and lower and lower. And we keep knocking on this low 119 door right here, and I was really anticipating that we could get through that. You can also see the nice selling zone that has appeared on the chart. It really was a nice setup, but news changes things, and news changed this event today. And you can see how it took out the decline of the past week. It's really the decline of the past more than just a week. But let me show it to you another way. Let's step this back just a little bit further, and let's go look at a daily chart view, and you'll see that even though the move was significant, it's not significant enough to really change what is happening with the pair. And what I mean by that is, if I bring up this daily view, you'll see that on the daily view we really haven't broken the trend that was set by that double top, that 1-2, that significant 1-2-3 pattern that's up there. The pair really just came up back up to that resistance line. Now that doesn't mean it can't go through it. As a matter of fact, I would assume that we're going to see some further decline to the yen through the end of the day and in the start of next week. As a matter of fact, the downtrend to the yen could continue for quite some time, but it's moved so far so quickly. There's going to be some type of volatility coming in the pair, into the yen and to the yen pairs, and I'll show you that in a little bit different detail here. Now keep in mind and remember, this is a daily chart view I have up right now. And there's a significant amount to be drawn by looking at this chart. We talked about this yesterday, and you can see that the low from last summer when we got into the May, June, July time frame, you can see how this low area was pretty significant, but the move out of this, and this is the whole reason I've been shorting the pair, not only was the move too fast and too furious, but the transitional activity up here at the top is just undeniable and did create an above average opportunity. But again, I'm encouraged by the increased volatility going into non-farm payroll tomorrow. I think it really just sets up for us as traders to be able to take advantage of a good situation. It hasn't done anything significant to break what is potentially an outstanding shorting opportunity. As a matter of fact, you could argue if the yen starts finding some strength again right away, which we'll see if that's going to happen or not. But if it does, then this has really just come up to resistance, and it could be a new trade down to the 120, 119 range. And again, if it can take out 119, the downside potential is tremendous for the pair. However, I caution by saying that because I don't think on the short term that is going to be our opportunity. Now look at the yen today. Let's take one more view. If we look at the yen just on the day, and we'll go to our CCYX view for today, you'll see that since rollover, the yen has been moving to the downside, but after rollover, it has in fact, when it got to its lowest point, we see that it has rallied back up and has reversed off everything it lost since the rollover time frame. The dollar, the pound, the euro were moving to the upside, and you can see they crested and started moving lower as well. Now the market's gone fairly dormant. Now this makes sense because we're not that many hours from the U.S. non-farm payroll release. So I wouldn't think we would see any, or at least any significant volatility between now and the release of that employment data and the unemployment rate for the United States. So I understand and accept the fact that the pairs are going fairly sideways at this point. However, as traders, you must be tremendously encouraged by the volatility that we saw in the market today. I think that bodes well for us going into the Friday. And as we start next week, increased volatility is great for us as traders. It may not be the direction that we want to see, because I was very encouraged by the shorting opportunity, but again, that's not necessarily off. It may just be off for the short term, but the increased volatility is what we're really after. I don't care if the pairs move up. I don't care if the pairs move down. I just want them to move and not trend sideways. And this goes a long ways in that throwing fuel on that volatility and that movement opportunity for us as traders. So if you want to know more, if you have any questions, post them on this video or send us an email. If you'd like to come into our trading community and be with us, do this real-time analysis and make trades based on the decisions and the things we're looking at in the marketplace, drop us an email at info@fxrbc.com. That's forexrangebarcharts.com, fxrbc.com. Send us an email. We're setting up couple guest weeks coming up. We'd love to have you in our room and take a look at what we do firsthand. You have a cordial invitation to work with us, take training classes with us, watch some of our recorded video archives of past training sessions, and really see if what we do and how we approach the market in our very straightforward, simplistic manner is a way that you might be able to peel back some of the problems that you're having in the marketplace and look for ways to improve your behavior as a trader long term. I invite you in, would love to have the opportunity to work with you, and this is my invitation to you to join us. My name is Derek Schimming with ForexRangeBarCharts.com. You guys have a great day trading. We'll look at this again tomorrow as the end of the week after non-farm payroll. We'll make an analysis of how the week ended based on the news events out of the United States and how we might want to be poised to take advantage of the market as we go into next week. Look forward to having you. Have a great day trading.